Today, we're thrilled to welcome Greg Agius, a trailblazer in the world of private banking and recruitment. He's also a very dear friend that I know for over 15 years. And as the CEO and founder of Agius and Partners, Greg has turned his extensive experience as a Swiss private banker and investor into building a market leading recruitment firm specializing in private banking, wealth management, and even in cutting edge fields like Web3 and blockchain. His company isn't just another recruitment agency. They're shaping how top talent connects with world class financial institutions. With a deep understanding of the industry and a human first approach, Greg is raising the bar for excellence in his competitive space. If you've ever wondered how to pivot successfully your career, build a thriving business, or navigate the future of finance, Greg's journey offers valuable lessons and actionable insights. Let's dive in and learn from one of the most innovative leaders in the industry today. So, welcome to the show, Greg.
Thank you again for having me. It's great to see you after all these years. 15 plus
Exactly.
years.
15 plus years,
Incredible.
but there's so much friendship, there's so much connection, and I followed your career and really inspirational. I think, especially, I want to hear your story. And you started your career in private banking and later you transitioned into recruitment. So what initially drew you to the world of finance and private banking?
Well, I grew up in New York City, immigrant family, half Italian, half Maltese. And I've just always been inspired by being the best version of yourself, hustling. I'm a big sports guy, so always feel no matter what you do, sharpen the skill set, get good at it. And I started the first job of my career at the UN, and I saw that the money ruled everything. And I said, well, I like investments already. Let me do an MBA. So I did that, got into private banking. Actually, first I got into private equity, which was fascinating for a New York-based firm. Then I got into private banking after that, excuse me. And I started enjoying it, but I was really more focused on the investment aspect. That was what attracted me to it. After that, I got a little bit into real estate, changed bank as a banker, and was essentially hired by a client to help run a family office in Geneva. And I was officially the head of corporate finance, but this ex-boss of mine has also become a good friend as well. And I had a few other tasks in addition, a lot of private equity deals, some third-party fund distribution, and also that family office was on the side of the client side of something like, 20 plus, 23 maybe private banks in Switzerland as custodians. So it was a fascinating time because I was a banker, went to the family office, was on the client side of the relationship, seeing which banks are good at what, which banks can open up accounts faster, where are their due diligence bottlenecks, what banks prioritize what market. And then randomly, I met with an old friend from Webster, actually, who was working at Hayes Recruitment Firm in Geneva. And Hayes is, the biggest recruitment firm in the world. And long story short, I had found out that they were looking to add someone on the finance desk. So I actually met with his boss, who's also become a very good friend. We discussed a few things and came to the conclusion that, hey, this might make sense because for them, but also for me especially, I feel that whenever anyone does something, for me to listen, there needs to be an added value. And in recruitment, I dealt with a lot of headhunters in Geneva, and I didn't have always amazing experiences. This is my diplomatic version, by the way. I'm being very polite right now. I didn't have stellar experiences. And I said, well, with me, there's some added value. It's not cockiness. It's just, I know the banks. So if I want to help out the HR department or the hiring managers, they're not going to have to hold my hand. I can properly filter bankers. So I went to Hayes. It was very good. I was there 2.5 years, maybe 2 years, 2.5 years. COVID came around. Things were not going great there at that Geneva office. And long story short, I went back into private equity for a year because I love finance, I love investments. And I said, you know what, after a year, it didn't feel right. And I said, look, I've really excelled at the recruitment side. At Hayes, I was doing quite well. Why don't I just work for myself? I've always wanted to work for myself. And I found myself in this position with married, two young kids. If I don't do it now, When am I going to do it? So I took a risk. I took a risk. Now it's coming on well, it is the fourth year of the company, going quite well. First year or two, never that easy, never without stress. But last year was fantastic, and I work with over 20 plus private banks in Switzerland. And what I do is a little specific. I hire senior private bankers, also known as relationship managers, with clients to go to, 20 plus private banks in Switzerland and also a little bit in London and Dubai here and there. It's a bit of a niche. Not a lot of people do it. These relationship managers, their bread and butter, the reason for them making money, feeding their families is because of their relationships. So a lot of them are very reluctant to speak with headhunters, especially generalists. I'd say a lot of recruiters tend to be generalists. Also in Geneva, you have a lot of very young recruiters. And I used to be young too, nothing against young people, but you're not going to have the experience or the gray hair to really do the job to a certain level. So they tend to kind of, whether they meet me through word of mouth or whether they meet me on LinkedIn or social media, they tend to say, okay, this guy was in the game, on the front lines. There's probably some added value here. And it's not just for my banking clients, the banks themselves, but it's also for the relationship managers. The reason I say that is because I don't know, choose a market. If you give me a Greek relationship manager, for example, right? Greek market. I know where there are bottlenecks for onboarding clients on the Greek desk at every bank. I know where that market is not a priority. I know where team members are unhappy. I know where they're going to be hiring. I know where they're going to be firing, usually, sometimes. It's quite discreet. So I think it's hard to walk that delicate line because I'm open about myself, but I'm also very discreet with my clients and with the candidates, while at the same time providing opportunities to both. So it's a bit of a delicate line. Tell me if I talk too much.
No, I think you already uncovered so much that I want to go like chew into because I think it's
Yeah.
such a valuable thing that you just meant. Many valuable things, but I want to chew them down one by one. First one was it's incredible how, as a client, you can really find product market fit. You went from talking to 20 banks, now you represent 20 banks or you talk to them, but before you were a client of them, and then you noticed, why is it hard? Why are they better? This one is a little bit more innovative. This one's easier. This one understands me better. This one's more expensive. This one is less expensive. That gave you so much knowledge to find that product market fit. And I think that's the key to every successful business is understanding that problem and knowing your market. Like you said, you can't be delicate if you cannot, like if you're just gonna trot over, you're probably gonna step on people's toes and nobody's gonna like that in a discrete market. What I do
Yeah.
want to ask you is what makes a good banker or a good fit? You said relationships is their bread and butter, but how do they build that, or how do you assess that they have the right fit?
Well, it's going to depend on the bank. Some banks are calm, some banks are informal, some are very buttoned up, very demanding. I have banks where if you don't have half a billion under management, they're not going to want to hire you. And I talk to banks where if you have 100 million under management that you can bring, fantastic, the door's open. So it's going to depend a lot on their individual personality and not only the bank's DNA, but also the team where they would be going, if there is a team. Sometimes it's just a full department and you have, again, we'll use a Greek banker as an example. We have a Greek guy and he just plugs into the Southern Europe team and he's kind of his own boss, really. You have KPIs, which are stringent, of course, but they're also not there to not meet the KPIs because when they meet their KPIs, their targets, they make more bonus. So it's a hard question to answer. I have some candidates who are new parents. They've been at more demanding banks for a while, and now they want to go to a bank where they can go home around 6 o'clock or 7 o'clock without feeling shamed. These things still happen, right? So you do have banks that are a little more family focused, quality of life focused. You have some banks that 5 days in the office, your butt is in the seat, you're there, people are looking at you. I'm an ex-JP Morgan guy, so I've seen it. You're in that desk, and if you leave by 8 or before 8 rather, people are going to be saying, what is he doing? So I don't want to be long-winded. Excuse me if I'm being long-winded. I just want to give you the best answer possible. It's going to depend on the individual banker and the individual bank, as you can imagine. But there's tons of factors. There's tons of factors. And then also, I think in the end, what the bankers want is a bank that's conducive to their clientele and to growing their client book. What does the bank offer that'll make my clients happy? Because if you're a banker and your clients are happy, you're happy.
Yeah. What do you think differentiates the guy that manages 100 million to the 500 million? What makes them more successful?
So that's a great question. I think there's two. We could talk about that all day. So I don't want to take too much of your time, but
You take it. So this is an interesting question.
it is an interesting question. So I think there's two things. I think there's attracting clients, which is not easy. You have to be very charismatic, like yourself and I. And the second part is also growing a book. So once you get a client, you bring in a client who's, an ultra high net worth individual. They give you 10 million under management. All the affluent individuals at this point, they're all multi-banked, right? So if you have 100 million, you're probably going to have an account at HSBC, you'll have an account at UBS, you'll have an account here, there, or wherever it may be. But you'll probably have 3 or 4 accounts. That second part, after you get the client, which is already tough, is how to grow the client. 2 ways: performing well for them, giving them some return on investment, helping them feel comfortable, understanding the markets, etc., and actually growing their wealth. And then the second part is, once you've done the first part, you need to say, okay, well, look, we've got something good going here. Why don't you allocate a little bit more of your wealth to me because of the results? So there's a lot of competition in the markets between bankers and banks, as you can imagine. Getting the clients, man, I'll tell you, I've seen everything. I mean, you can, getting the clients, you could just be a nice guy and you're in the right place at the right time. But I think a lot of people go about the acquisition part in very different ways. You have word of mouth, which in Switzerland still works, but Switzerland's a small country. You have large business trips that you can take to, use your network as much as possible. A lot of these people are quite well networked. You've lived here in Geneva before. That's how we know each other. Everyone kind of knows each other, right? So that can be conducive to gathering clientele once you establish a good relationship. Other ways, there's a lot of financial events, a lot of investment seminars people go to, a lot of ultra high net worth individuals go there. I'm not sure they're thrilled about being poached by bankers there, but it happens, and a lot of the time it works. It's usually, there are so many ways. I've seen, there's also, and I've seen this so many times, there's also kids who can be quite privileged. In Geneva, for example, there's a lot of kids whose parents are diplomats or whose parents are high-level executives in companies, large net worth, relatively affluent net worth. The kids grow up eventually. Some of them like finance. They go into a bank, and guess what? Parents' friends are sometimes already clients at the bank, and then they manage the account. Or sometimes they go to their acquaintances and say, look, I'm doing this now. Can you put your faith in me? Let's do it.
Yeah.
So there's almost no answer. There's just so many ways.
For sure. I don't want to brush off what you said, that if you didn't start your company now, it was now or never state, because I think that there's a lot deeper to starting a company. What inspired you to pivot from being dependent to being independent, or to going into your own company?
I'd love to tell you it was courage. It wasn't. Or intelligence. It wasn't. I think I got to a place where I felt it was unnatural that I was working for other people. I'm an easygoing guy, get along with everyone I meet. But I was tired of, if I have to get my tires changed on the car on Wednesday, at a certain point I just got tired of asking people for permission to do basic things. It was never necessarily my dream to be an entrepreneur, right? But actually, now that I'm doing it, the first thing I tell myself pretty much is, why didn't I do this 10 years ago? You discover yourself with age, right? And this was kind of a journey of self-discovery in a sense. The beginning was tough. I chose to create my company so I'm married, 2 kids. My youngest, how old? My youngest was like 6 months old at the time when I decided to, maybe 9 months-ish, when I decided to create my company. And when you create a company here, you don't go on unemployment. They just say, okay, you want to create a company, be a big boy, pay for yourself, we're not helping you. So it was a bit of a leap. But I said, look, now or never. And much like yourself, I love financial independence. I love the concept. I love investments. I was quite involved in real estate and private equity a lot. And I said, look, if you want to change your quality of life, what's the percentage of employees that have changed their quality of life, like really changed their quality of life? And for me, I don't really work for money. I work the way I see it for assets. But I don't even care about me. I care about my family. It's not even me. I don't even factor into the equation. For me, I'm building for them. And so that motivated me. That motivated me. I've been on so many corporate calls, KPI calls. The best thing, I think if you're good at something, work for yourself.
You said it so eloquently. You don't work for money, you work for assets. And when you work, when you have a steady paycheck, I think there's those like three things that are the most addictive in the world. It's like heroin, probably carbs, and a paycheck. It's like that level of addiction. And then you really work for,
And they're all bad for you, in
I
my
don't know if
opinion.
carbs can be all bad, but yes, they are pretty bad for you. And the salary side, like you said, like you were limited to KPIs. You were destined to do things one way, but if you're really good at something, do something else. And I think it's a great advice. What were your initial challenges? You decided, let's do my own thing. Even though you said it wasn't courage, I think it takes a huge courage to do that with
Thank
two
you.
kids, and you were good at it. But what were like the initial challenges that you faced, and how did you solve them?
Yeah, I think the biggest, well, my wife is a lawyer. And the reason I say that is because the admin side is not my strong point. I've never been an admin guy. I've been a business guy. Let's go do it. Tell me about it. I'll learn about it. I'll take notes. The admin side, I'm not great at. So a lot of admin when creating a company, of course, licensing, everything, that takes a lot of time. And then I think the biggest thing, to give you the best example, is when I first started the agency, this was also during a crypto rally. And I invested a little in Bitcoin, a little bit. I have a very close friend here who went to Webster as well, who's very much involved in crypto, got me into it a little bit. It's not my favorite asset class, of course, don't get me wrong, but I got into it and I said, look, the crypto sector is growing quite a lot. Why don't I make the first recruitment agency in Switzerland for crypto? That could really take off. So what I did is the first 6 months, I pretty much marketed it as a crypto recruitment firm and finance as well, which had put private banking a bit on the back burner. Or not at, let's say it wasn't the focus. After 6 months, I realized how I was less than pleased. Again, this is the diplomatic version. I was less than pleased with the quality of potential clients in Switzerland in the crypto industry. I'll save the profanity for after the podcast. And I said, you know what? I'm going to go back to what I know best, what I've done best, and where there's always a need. And so then I pivoted back. I found myself a little bit with my tail in between my legs in certain ways. But I said, look, I'm not an egocentric person. I'm just going to change the banner, change the marketing a little bit, which I'm not good at, and go into private banking. And then I did that big pivot, 6 months, 9 months, something, into after the genesis of the company. And I said, oh, wow, this works. The story is very organic because the beginning, especially in crypto, I would have to sell why work with me. With the private banking, private equity, finance, even some real estate every now and then, I don't really have to, I don't sell anything. I don't go into, it's very psychological. I don't go into any meeting saying, oh, I hope I get this mandate. I just don't do it anymore. One, because I'm tired and I'm sleep deprived, so I don't have the energy. Two, which is more importantly, is because I know my own story. And if they don't think it makes sense to work with me, then I probably don't want to work with them anyway. Because the best person to hire private bankers is an ex-private banker and also someone who's recruited just numerous. It's hard to quantify. Switzerland, there's not a lot of public information out there, so I can't say that I'm the market leading recruiter in Switzerland for private bankers. Maybe I am. I don't know. It's not public, but I think that it's going very well. And for me, I go into a meeting. It's not ego saying it makes sense to work together. If they don't want to, it's pretty much crazy because I run a success-based business. So where's the risk? Although some banks are particular and they just no, we don't want to work with anyone else. You have a bit of everything.
I do think you are a leading recruiter in Switzerland. And also, I love the idea of, you started with a perhaps hype into Web3, perhaps everybody's talking about this new shiny thing, and no one was, and everybody was playing catch up, and including the candidates, as you just mentioned. Like if you couldn't find a good candidate in Switzerland, Imagine other places like Miami, where I live now, the crypto bros and things that happened in the NFTs, and they took it in the wrong direction, obviously. In that time, they looked like geniuses. They're like, this guy sold a monkey for $20 million. They're like, what am I doing?
That's the
Complaining and not making the 20 million.
that's the hard part on the recruitment side, right? And you hit the nail on the head. Is that on the recruitment side, the guy sells the monkey, the virtual monkey, for 20 million. Now he's got $20 million. So the next step that Monkey Man does is Monkey Man creates a crypto company because he's already
Yeah.
made money in crypto. So he's going to create a company. He's going to hire 100 people on Monday. And then on Wednesday, when things don't work, the market goes down, he's going to fire 50 of them. And so a lot of the crypto companies, it's hire and fire just nonstop. And you have a large rotation just back and forth. Now, I'm not really involved too much in crypto,
Hmm.
nor the recruitment side at this point, but it's what I noticed. This was, when was it? This was 2022, early 2022. And so I said, look, it doesn't make sense. A lot of people got rich overnight. And again, Monkey Man, which is what we're going to call him from now on, who sold the ape picture, the NFT, for 20 million. It's not because he created a company that he got rich. He got rich because he did something creative and it paid off. But a lot of these people who are getting very rich have never created a company and they've never been entrepreneurs. And that shouldn't block them from doing it. But the reality is a lot of them fell kind of on their face, especially after hiring many people who depend on their salary to live. So that was a big pivot point for me. And I said, okay, we're going to go back into private banking, Swiss story, my background as well.
Yeah. And there's a parallel between you and me, which is funny. Not only is your birthday on Saturday, mine's on Friday.
Come on, tomorrow.
Seriously.
Amazing.
And we both know each other from Switzerland and friendship and similar background, similar stories, similar universities, all that stuff. But I started my company thinking of tokenizing real estate because it was the new technology. And I was like, how is it possible that we don't have this technology in this old industry? One of the oldest industries that has not evolved and has not changed. And certain countries are starting to tokenize, or at least put their assets on the blockchain. So in case of war, you don't have the loss of archives because it happens in mainly Eastern Europe countries. So to me, it was like my light bulb moment. I spent tons and tons of money into developing a platform and being able to tokenize, and I got there. And then I noticed the industry wasn't ready, or the consumer wasn't ready, and the investor says, hey, I don't care if it's tokenized or not. I care if it's like securitization is not a problem. It's not the issue. It's how do you find me the best asset possible? How do you find me the what makes sense? What is the safest thing? I don't want to be on the edge of cutting technology that's not regulated yet, you know? So my company went through the same sort of existential crisis in 2022, right after FTX, when I was like, I'm out. I don't want to be associated with anything that has to do, even though I believe in the space and crypto, and I believe in, and I have a little bit, but I'm not a crypto bro. I'm not like a Web3 entrepreneur. I went back to the basics, and I went back to hey, like what you said at the beginning, the guy that does 500 AUM versus the 100 AUM is the guy that was charismatic, but then delivered, was able to give results, because that guy talks, all their friends talk, and then you get more AUM.
100%.
So a lot of similarities into your story.
That's so funny, man. Well, look, I hope you do visit Switzerland soon so we can catch up in person. It's funny that you say that. I mean, first off, to touch on your point, so it takes a lot of courage to do what you did. And tokenization of assets is a phenomenal idea. I think we're really, truly in the early days, early minutes almost of this technology. I don't want to be long-winded. I'll give you a quick little thing. I went to this Bitcoin conference 4 years ago, right when I started the company. And this was 3 years ago. It was right when the Ukraine war broke out. Anyway, and they were talking about the national reserves, everything. And they were saying, what can be easily robbed? Bars of gold in banks physical cash in banks, bearer shares in banks, which almost don't exist anymore? Or what happens if we have essentially all the national money, currency, on a cold wallet? Can't be robbed, in theory. So it's fascinating how physical robbery can still happen with a lot of assets like gold, whereas crypto cannot. So that part is interesting. And also, I think in Ukraine's case, there's a lot of hacking. The banks are not in full swing. I mean, it's quite difficult. So I think these asset classes are very safe compared to traditional banking systems when there's a war. So I think there is added value.
For sure. And I agree. We are in the early minutes of tokenization and that technology. I believe every single country in the future will tokenize their assets to hold them in a ledger that cannot be changed, corrupted, or the what happens in a lot of like old European countries where you buy a property and then 30 years later there's someone that owns it as well. What do you mean? Now we need to have a lawsuit, and it's like, oh, I have this paper from the 1800s. My grandfather used to own this land. And you're like, what do you mean? Like, this can't happen in today's age when
That
everything
would be
should
so
already
bad.
be.
That would be so bad.
That happens.
Oh,
France
I
is
believe it.
notorious for this to happen.
Crazy.
Talking about trends, what do you see in the private sector today? What's new? What skill sets and traits are in most demand?
So in the private sector, in banking and
Banking,
finance.
banking.
So what I do is pretty specific in terms of the profiles I hire. I've hired a bit of everything in the banks, right? Like I've hired compliance. So I'll give you an anecdote from before I started my company. When I was at Hayes, I placed tons of compliance officers in the banks. Switzerland has been a huge compliance hub now. The banks have shifted from growing the assets to getting their compliance in order. So that was a massive trend as long as 10 years ago and even now. Tons of compliance officers. Another trend, the private bankers, the relationship managers, that's always a trend. Because if you have someone with 300 million under management or more, no bank is going to say, no, please don't talk to us. They're going to say, let's talk now. So that's always a trend. To go more granular and hopefully answer your question a little better, in Switzerland, there's been a big tidal wave, big paradigm shift, as you know, and we all know who are involved in the investment world, right? So 2008, economy collapsed. Eventually, now there's no banking secrecy. So Switzerland goes from a country that was more, let's put the money a little bit out of visibility and avoid some tax. I don't want to be controversial online, but that's kind of the mentality of what it was, right? And all of a sudden, there's no more banking secrecy. We have to catch up with compliance. But London is a 1 hour flight from here. Dubai is a very comfortable flight on Emirates, 5-6 hours from here. New York is not that far. Now we need to compete with the global money hubs on the investment side. Because before, the focus wasn't, hey, make money. That wasn't the focus. Speaking honestly, the focus was hide the money. Now, we got to make money. Why am I giving you my money? And that, I think, where I'm a neurotic New Yorker, so I think that's where my culture sometimes comes in on the investment and finance side. Is when I speak with bankers and anyone, I've placed chief investment officers, chief portfolio management officers. I placed a lot of very technical roles too in the banks, very strategic roles. When I'm in my happy place, it's talking about the investment side of things. And when you ask about the trend, I think the banks would like private bankers who have a very good investment skill set and investment knowledge. It's not always the case. It's truly not always the case. You have some that really don't know much about investments. I wouldn't say the bulk of them, of course, but you have many that are not very well versed in investments. And whenever they find someone, I have a lot of banks I work with. If I find somebody who worked in the corporate bank somewhere and then moved into private banking, jackpot. Fantastic, because they understand the investment banking side, essentially, and the private banking side. And when it comes to the investment side, which is more important, talking about trends, really it's a win-win for everyone. It's a win-win-win. Client wins.
I agree with you.
Yeah.
I absolutely agree with you. I love that you said prior to 2008, The competitive advantage of Switzerland was hide your money, was secrecy, even from your kids. Like it was sort of like, how do I transfer wealth without making them crazy? Or if someone was not necessarily the best type of money, it was a little bit of weird times. Post that, it was okay. Now let's compete with the big boys that have been doing this forever. So how do we do that? And you just mentioned results. You just mentioned investment acumen. And I agree. When I lived in Switzerland, I spoke to a few private bankers, and even without a lot of experience, I thought they are more knowledgeable about client relations, like, how to wine and dine, how to talk, how to dress, but the investment side was a little bit of a lagoon, or I thought maybe it was like a black box, which I didn't like as a client. I didn't want to go to a meeting and be like, okay, so what do you think about, should we focus on the 11 sectors of the S&P? Which ones do you think, or does the bank think is going to be more successful in the next 5 years? And they'd be like, our portfolio is a blend of everything, and we change. You're like, you're not telling me what I'm asking.
And half of it is proprietary products.
Yeah. Everything is proprietary. We don't tell you anything. We just give you results, and you say thank you. But then
And what year was that? Ish.
that was when I lived there. So that
Okay.
was 2007, 2008,
So that was before
9.
the poo-poo hit the fan.
Great financial crisis. It was great to be have Swiss banks in the great financial crisis, because I felt it was more mitigated than the big boys. I think the big boys were a lot more aggressive. They were more exposed to the downfall, to everything that was shine they were after, whereas Swiss banks were a little bit more conservative. But now it's different. What do you think about the trends of alternative investing, and not only, traditionals and what everybody has access to, but this more niche thing that most family offices now are thinking like, hey, I need to have alternatives. Are banks going there, or are they
So
like,
I could give you a 10-hour answer on that very good
love
question
it?
you just asked me. So I so after my brief stint at the UN, where I was in private sector fundraising, I went into private equity pretty much. This must have been, I want to say 2010-ish, around there. And I was a business development guy. Was the only guy in Switzerland. It was a New York City, Manhattan run firm. I was the guy in Switzerland heading it up. And private equity was not seen in a good light. Alternatives in general, to be honest, weren't, but especially private equity, and even more so venture capital. And so I was getting to know everyone as the private equity guy in Geneva. I mean, no one was doing private equity. It was like, oh, no, we don't want that. Yeah, 2015-ish, I want to say, comes around. And private equity is fantastic. Now it's becoming mainstream. People are doing it more. It's not only for the ultra high net worth clients. It's for a bit of everyone. The banks are starting to buy larger chunks of it, can dissect it more. The barrier to entry goes down a little bit, and it starts taking off. And for me, especially when I started private banking, I started at JP Morgan. I was fascinated by the alternatives team. And I even wanted to work in it. I left JP Morgan to go to Citibank, but I even wanted to work in the alternatives team for a while. Look, the fact is, and I've seen many of your podcasts, and I love the discussions you have with a lot of the people on there, because you really go into granular detail about things. And it explains things in a very easy way for stupid people like myself to understand as well. I think in terms of, the financial freedom discussion, you need real estate, period. If you don't have real estate, you're insane. I mean, how can you not? A lot of banks were not doing a ton of real estate, surprisingly, especially for their private clients. Not doing a ton of real estate. If you want to make returns, alternatives are what are performing. The stock market now is fantastic, right? But not as much as private equity. Venture capital, where are you going to make a 20x? You're not going to make a 20x, with the normal kind of risk profile at a private bank in Switzerland, right? So people, again, the banks shifted, the mindset shifted. Okay, hide the money versus make the money. If you're going to make the money, make the money. So 4% is not going to change my life. Me personally, I'm not, for me, if I invest, let's say 100,000, I make 4%, it's going to change nothing. What's $4,000? I'm not an ultra high net worth individual, but the fact is I have a family and kids. $4,000 is not going to do it for me in a year for a hundred
Right.
thousand investment. It's not going to change anything. I'm not going to live to 500. I need to make some significant returns. So people have been realizing that. People have been realizing it. You and I are doing a podcast right now from I don't know how many miles away from each other. Technology has increased. Awareness has increased. 15 years ago, 20 years ago, when you and I first met each other, right? If we wanted to say, okay, how does a hedge fund work? We'd have to walk our asses to the library, open a book, maybe call someone we know who knows someone at a bank, physically walk there. Okay, how does this work? And get an explanation. Now I click on my phone, how does it work? Or ChatGPT, boom, everything's there. So sorry for the long-winded answer, but the reason I said all that is now the clients are getting more sophisticated because they have the answers right at their
On their phone.
fingertips.
Yeah.
And they're also saying, well, how come these people are making all this money and you're making me 2% a year? It's not going to cut it. No.
This is really important point because the client wasn't as educated, as exposed as they are today. The client went to the Swiss bank to get the knowledge. They used to go there and say, "Hey, what's new? What should I do?" Now the client, what you're saying is that the client is coming there and saying, "Hey guys, you guys are underperforming. Why are there these people that are doing 30, 40% a year or 20% or 10x or whatever it is, and we're sitting with 4?" Even as a high net worth, even as a ultra high net worth, it doesn't cut it because at a certain point, I believe everything becomes about results. You don't do it for more money. You do it for, for the mental side, for the challenge and not to fall behind. And you can always say, oh yeah, we were more conservative. And I hate this word conservative aggressive because it really doesn't say anything. It's just a justification of not doing what was right at the right moment. Sometimes you can use the word, I was conservative, so I rather go the safe route. You said, no, the safe route wasn't to do that. It was safer to do the next because now the world is 10 times more expensive than it used to be. And I need to be in that level. I've lost purchasing power. I've lost opportunity. And that's more risky than doing treasury bonds for the last 10 years. Like it doesn't work that way.
Love what you just said because I love what you just said, man. That's exactly how I feel. I tell people this every day, exactly what you just said. We'll go back to starting our own business, right? Oh, it's risky. For me, risky is working in an office and not making any money, not building something for my family. That's the risk. That's the risk, man. For me, it's not making the money and not building something. I consider it risky being an employee at this point.
Absolutely.
For me, it's risky. People get fired every day. I don't want to have to depend on. So it's funny you said that, and obviously that risk profile has changed for the banks. I think the banks now, I think there was a period, call it 8 years ago, where the banks were really struggling to catch up with the alternative investments, and I was quite critical of them too, to be honest with you. But I think in general, the banks are making a lot of strides with the investment side now, and the alternatives specifically. I work with a lot
I'm
of
really
banks.
glad to hear that it is client driven, but it's also responding because it's what I
They're
find that
responding.
old time
They're
bankers
responding.
usually are like, this is like banking secrecy, what I'm going to give out right now, but it's in the system versus out of the system. Banks love to keep money in the system. So they sell you their ETFs, their funds, their things so that it's in the system. Once it's in the system, everybody gets richer inside the bank. That's how the bank grows in AUM. But if a client comes and says, here's 100 million, but I want to invest 50 million in this real estate fund, it's 50 in, but 50 out.
Exactly.
And that is out of the system. So the banker says, I don't think that's a good idea because it's incentivized to keep it in the system.
Huge conflict of interest.
Huge conflict of interest, even if it's better for the client, even if it's results driven and it'll make the client richer. But this in the system versus out of the system is something that people don't talk about. And I know that I'm going to get hate and people are going to be like, oh my God, why does he expose things? But this is the truth as a client. I love how you put it in your profile, from investor to recruiter. You understood how it was to be a client, so you became the best recruiter. I was the I was the entrepreneur turned investor, now turned investment manager, because I noticed that as a client, I was not understood. And what I
There's
wanted
always a
is
gap to fill. With good experience and with good people, there's always a gap to fill.
absolutely.
100%. And I think what you're doing is I mean, I love what you're doing, and I'd love to hear more about it. Because I think, alternatives and especially real estate is just such a fantastic sector. After COVID, inflation is just running wild. And a lot of people are still, I think, you know, a lot of people are still just kind of going out their lives like normal, which is fine, but they're not really thinking about how high inflation is, how pricing has gone up so much.
That's why I fear the stock market more than ever.
Yeah,
I
100%.
think people are delusional by not factoring in inflation into a bull run market. They think, how has it been so high? I'm like, is it so high?
Crazy. It's
Why is
crazy.
it so high? It doesn't make sense.
No, no,
And
no,
I
no.
actually believe it's going to be a real asset revolution, whereas these ethereal, more, in the air valuations are going to come to back down to earth. They'll go up again eventually. Everything's a cycle. But I believe the next cycle is real assets based, real
Agreed.
estate, energy, tech too, but really tech that's applicable. I don't think you can go with a PowerPoint anymore and say, I have an idea, and people being like, $1 billion valuation. Great job for your presentation. That to me is like out of this world now.
No.
And the
10
monkey
years
man
ago,
will not survive again.
I think you're 100% right. I think real assets are the way to go. Again, and we were talking earlier about it briefly, for the whole passive income, financial independence, and just building something solid for your family, for yourself. Real estate is just a no-brainer. It's just a no-brainer. And what I
Absolutely.
like,
Go
oh, I'm
ahead.
sorry, I was about to compliment you, so I'll go. What I like,
Thank you.
what I like about really about a lot of your interviews and a lot of your conversations and posts is that you go into granular detail about real estate as well, Lou. And that is huge because a lot of people don't understand it. It's the concept itself is, oh yeah, I can buy a house and I can rent it out. Okay, it's not always that simple. And there are barriers to entry, aren't there? And you help navigate that as well. And that's, I think, brilliant because I'm not a social media guy. Really, I'm not. I follow sports on Instagram and I follow your channel and one other channel called The School of Hard Knocks. You probably know. It's this guy who interviews billionaires all over the country in the US. And what I like about those short videos that he does is he goes up to just these random, very affluent people. I don't know, he'll camp out outside of some sort of rich area or country club, and I'll ask them, what have you done for a living? Are you a millionaire? Are you a billionaire? Ask them for their advice. And they give general advice. But what I like about what you do is you essentially, maybe you don't know you're even doing it, but you take a lot of these subjects and you go into more granular detail, which is multiples more helpful for people who are looking to do any one of those given ideas, like real estate.
I appreciate the compliment. And as I said at the beginning, I do this for myself. I do this selfishly because when I ask someone for their advice, I apply it. I already learned. I already saw. So it's a way to gain much more exposure. I don't do it for the social media. I don't do it for the likes or the follows. Like that's not part of the process. The value is created by talking to people like you, people that are forefront, people that can give me the insight in what's happening in Switzerland by a conversation of an hour over me having to go to YouTube and seeing like maybe someone has answered this or maybe not. So I get the answer I wanted immediately. So I really want to thank you for being here, giving your insights, giving your knowledge, touching base. You're a dear friend. And thank you so much for the compliments. I want to ask you
It's
one last question, a
mutual.
few more last questions. It's where do you see your company going in the next, what's in the future? What's in the pipeline? What can we see from you?
Well, first off, it's so nice to see you. I'm humbled that you would choose me to be on your podcast. I really am. And I hope we see each other here in Geneva soon too. I had a few phases when I created the company. First, it's just going to be me. I don't want to deal with anyone. I don't want any additional drama. I don't want to manage people. To saying, okay, we're going to do a big company. And then I shifted a little bit in between a few times throughout the years saying, should I grow it? Should I just keep it calm? Because it's working just me. It's working fine just by myself as well. I do have two people that with the company now, people I know for a long time who I trust, both experienced in private banking and asset management for that matter. And yeah, it's a good question. And I don't know how to even answer it because I'm not sure I know yet. I'm still, it's the fourth year now. It's going very well. I would say we're a market leader in the hiring private bankers for sure. Thankfully, it took a lot of work, a lot of stress, a lot of gray hair. I'm not sure you can see it. It's there. And we'll see. We'll see. But what we do now, what I can say is all of the senior private banker roles, which I have perpetual mandates for in Switzerland, is only me. And all the other roles within the private banks are my colleagues. So there's a bit of a Chinese wall where I can keep the banker's info as discreet as possible, even though I trust my colleagues. But these kind of higher level roles tend to require more discretion and less eyeballs. And I have two people that work with me who are fantastic. And who knows, maybe it'll be a big agency, maybe it'll be calm and boutique. I'm not sure I even know what I want in terms of the size of the company right now.
That's perfectly fine. And I think you're welcome anytime back to the podcast
Thank you so much.
in a
I really
year,
do
in 2 years.
appreciate it.
Let's see where you're going, hear your insights. This
Thank
was
you.
a masterclass into, and maybe even a masterclass plus a behind the scenes of what's happening in banking, what's happening in recruitment, and how you've been able to build a business from being a client to now providing that, filling that gap effectively and becoming a leader in that industry very quickly.
Thank you so much again. I appreciate the compliments. It means a lot. And it's a fascinating, I could talk your ear off about the whole sector. I mean, there's so many different subjects. Yeah, I really enjoyed the time. You tell me when suits, but the trends are going in the right direction. I think the economy, like you said, there's a lot of inflation, but the markets are good for now. The banks are doing much better and they're working on that investment side, alternative side a lot. So maybe I'm crazy. I'm a bit of an optimist right now.
Like it. Awesome.
Maybe the
Thank
next
you again
time you
for
have me
being,
on, I'll be a pessimist. Who knows?
I can't wait. Thank you so much
Me
again for
neither.
being
Thank
here.
you so much, and we'll chat very soon.
Of course. Thank you.
Take good care, man. All the best.